money.
After taxes, after everything, I got $1 million. And I, for the first time, had money in the bank.
Right.
That million became worth 13 million. And I said, wow, well done, Mohnish. And so I got 70% a year.
It is, I think it's really useful. It was really useful for me to set an absolute target. Okay, so let's say your absolute target is that I have a very small amount of capital and I want to double it every 3 years, for example. What that means is you need to be generating about 26% a year or something. So which means that you really can't buy a business at 80% of intrinsic value, because even with some growth and stuff, it would be hard to get a double in 2 or 3 years. But if you are able to buy an asset which is worth $1, but you were able to buy it for 30 cents, that may lend itself to something like that. And so the range of assets that can give you that outcome can vary a lot.
Over the last 18 years, Mohnish Pabrai has achieved an annual average rate of return of more than 25%. But how did he do it? What are the principles he is following? What can we learn from him? And what stocks does he own right now? This is what we are going to explore in this short video. Not surprising, his investment philosophy has been inspired by Warren Buffett and Charlie Munger and grounded in such principles as margin of safety, patience, and cloning successful strategies. These principles have enabled his funds to deliver exceptional returns over the years, and in one instance, his investment in Satyam computers delivered a 140-fold increase. Warren Buffett has said this about Mohnish. Mohnish is one of the best investors out there. He understands the importance of focusing on the process and not the outcome. Warren Buffett. While Charlie Munger has said this, Mohnish is a very smart guy who knows how to stick to his principles, and that's why he's successful. Charlie Munger.
Is the greed portion of our brain can sometimes mislead us. And so it's really important to have circuit breakers on that greed. So one of the circuit breakers I have is I have a pre-investment checklist. It has like 160 or 170 questions on it. And I run any investment through those questions before I invest. The big value the checklist adds is that the first time I run it, it'll pop up maybe 10 or 20 questions, but I don't know the answer. And what that says to me is, listen, dummy, you are not done with the work. You can't even answer these questions. So first go and figure out the answer.
Mohnish Pabrai's approach is both disciplined and insightful. Drawing from his experiences and the wisdom of great investors, these principles offer practical guidance for navigating the market. Here's a breakdown of Pabrai's top investment principles, complete with key quotes and explanations that reveal their core wisdom. This channel is focused on delivering the highest quality content about finance and investing. If you have enjoyed this video, please subscribe so you don't miss any of our content or free resources. Additionally, please comment on this video. We value your input. And finally, we have a special gift for you, so please continue to watch until the end. We have something for you. 1. Heads I win, tails I don't lose. Much Pabrai's investment strategy hinges on asymmetric bets, where the potential upside significantly outweighs the downside risk. He aims to avoid strikeouts by focusing on opportunities that minimize losses while offering substantial returns. As he explains, if you take care of the downside, the upside will take care of itself.
In investing, I mean, the important thing in value investing, as practiced by Warren Buffett and Charlie Munger and so on, the very first thing is downside protection. We don't even look at upside until we first look at the downside.
This principle allows him to protect capital, ensuring that even when investments don't pan out as expected, the losses are minimal. Conversely, when investments succeed, the gains can be substantial, creating a favorable risk-reward ratio over time and compounding wealth effectively.
Focus on the downside. And we as investors and value investors, we do the exact same thing. Whenever I'm looking at an investment, what we want is we're looking for free lunches. We want the downside to be zero or as close to zero as we can get with a massive upside.
2. Invest in simple businesses. Pabrai emphasizes the importance of investing in businesses that are straightforward and easy to understand. Complexity often brings hidden risks that can lead to significant losses. He advises, never invest in a business you cannot understand. as understanding the business model allows for more accurate assessments of value and risk,
promising that they overshadow current valuation concerns. Mohnish spoke about his experience with Apple stock, but there are plenty of such instances when investors have missed the boat. Tesla is another example.
By focusing on simple businesses, Pabrai stays within his circle of competence, where he can make well-informed decisions. This approach reduces the likelihood of costly mistakes and ensures that his investments are grounded in solid, comprehensible fundamentals, which align with his value-oriented strategy.
To, as quickly as possible, reject the idea so I can get back to general reading. So the model is not to find investments. The model is to find the flimsiest reason to say no. And as soon as I get to the first reason, I'm done and I move on. And usually two things work pretty well for getting rid of stocks really fast. The first is circle of competence. You know, you encounter, if I look at some pharma company or something, it's gone. I don't even need to look beyond the name.
3. Clone successful investors. A strong advocate of learning from others, Pabrai openly admits, "I'm a shameless copycat. Everything in my life is clone. I have no original ideas." He believes in cloning the strategies of successful investors, such as Warren Buffett, to reduce the likelihood of mistakes. Don't innovate. Copy the best ideas, he advises.
So when I first started out as an investor, I spent a lot of time reading up on Warren Buffett and Charlie Munger and the Berkshire annual reports and all of that.
By following proven strategies, Pabrai leverages the accumulated wisdom of successful investors, effectively standing on the shoulders of giants. This approach allows him to replicate success, benefiting from strategies that have already demonstrated their effectiveness over time, rather than venturing into untested waters. 4. Be patient and wait for the right opportunity. Patience is a cornerstone of Pabrai's investment philosophy. He advises, wait for the right pitch. Don't swing at everything, highlighting the importance of being selective and disciplined in investment decisions.
But we have patience. So most investors don't have multi-year horizons. They want, I want to buy a stock at 10 and 2 weeks later I want to sell it at 12, and then I want to buy something else at 12 and sell it at 15, and I want to keep doing that. Well, good luck.
Pabrai believes that the best opportunities are rare and that waiting for them is essential to achieving superior returns. The big money is not in the buying or selling, but in the waiting, he notes. By exercising patience, investors can avoid chasing mediocre opportunities and instead focus on those with the highest potential, ultimately leading to more significant and consistent investment success over time. 5. Learn from mistakes. Pabrai views mistakes as an inevitable part of investing and an essential learning opportunity. Mistakes are the tuition you pay for learning, he says, emphasizing the importance of recognizing and analyzing errors to avoid repeating them.
Charlie used to say to me that you want to learn from your mistakes, but you don't want to learn too much. Investing is a business where if you have a 50% error rate, 40% error rate, that's par for the course. So it is a business where there's going to be a large error rate because we're trying to project into the future. Anytime you're trying to project into the future, it's fraught with uncertainties. So you're going to have a lot of errors. And I think it's a useful exercise to look at the things that have not worked and why have they not.
Pabrai believes in using checklists to systematically prevent mistakes, refining his investment process over time. By embracing mistakes as part of the learning process, Pabrai continually improves his decision-making and enhances his investment outcomes. This commitment to learning and self-improvement is a key component of his long-term success, turning setbacks into valuable lessons that drive future success.
Is the greed portion of our brain can sometimes mislead us. And so it's really important to have circuit breakers on that greed. One of the circuit breakers I have is I have a pre-investment checklist. It has like 160 or 170 questions on it. And I run any investment through those questions before I invest. And the big value the checklist adds is that the first time I run it, it'll pop up maybe 10 or 20 questions where I don't know the answer. And what that says to me is listen, dummy, you are not done with the work. You can't even answer these questions. So first go and figure out the answer.
Mohnish Pabrai's current portfolio. So what stocks does Mohnish currently own right now? At the time this video is being published, here are his top 4 holdings. They represent the majority of his portfolio. Alpha Metallurgical Resources. The ticker is ARCH. It's 54% of his portfolio. Arch Resources. The ticker is AMR. It's 26% of his portfolio. Warrior Met Coal. The ticker is HCC. It's 13% of his portfolio. Consul Energy. The ticker is CEIX. It's 7% of his portfolio. GuruFocus.com. So the best way to stay on top of what top investors like Mohnish Pabrai, Warren Buffett, Ray Dalio, Bill Ackman, and others own is to subscribe to GuruFocus.com. For a little more than $1 a day, you get access over 140 top investor portfolios. You can see their holdings through their 13F filings as well as trading history, a comprehensive stock dashboard, 30 years of financial data, and much more. You can even try it free for 7 days. We have left a link in the description below, and while we will earn a small commission, it's not why we are recommending it. We have used it for years, and it has saved us hours of reading and consolidating 13F filings. Just one good investment idea will pay for a full year's subscription. Discount brokerage accounts. Many small investors don't realize they can trade for free. If you are just getting started or looking to try a new brokerage, we have left links in the description to several discount trading platforms we trust. They include eStarTrade, Robinhood, Webull, Fidelity, and several others. Many have amazing apps that make trading and tracking your portfolio even easier. Mohnish Pabrai's investment philosophy is grounded in principles that emphasize caution, simplicity, and long-term thinking. He advocates for asymmetric bets where the downside is minimal, but the upside can be substantial, ensuring a favorable risk-reward ratio. Pabrai focuses on investing in simple businesses within his circle of competence, avoiding unnecessary complexity. Mohnish has written 2 books, Mosaic, Perspectives on Investing, and the Dhandho Investor, the low-risk value method of high returns, where he lays out in detail his investment philosophy and process. We would highly recommend reading these 2 books to anyone who would like to learn more. We have also left links in the description if you wish to purchase. Finally, thank you for making it this far. As we promised, we would like to give you your gift. In the description below, there is a link to a free reading list of the 100 must-read books in finance and investing. For each of the books, we have provided a short summary so you can focus on what interests you. The reading list covers a wide range of topics including personal finance, investment strategies, financial markets, behavioral finance, real estate, and even risk management. There is literally something for everyone. If you have enjoyed this video, please watch another one of videos or review some of the free resources we have put in the description section below.